Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of U.S., Hong Kong, MPF. Is it taxed? Is it reportable? What do you do if you have one? What do you do if you never reported it, right? So the problem with Hong Kong from a U.S. person tax perspective is the same issue with countries like Taiwan and Singapore. And that's just that there's no tax treaty, right? There's tax treaty with China, no tax treaty with Hong Kong. So that complicates unnecessarily issues involving income that may be otherwise receiving deferred tax treatment in the country of source, right? In Singapore, you've got a CPF, Hong Kong, you got an MPF, Malaysia, you got an EPF, right? So the MPF, it's similar to a 401k and it's similar to Social Security. There's kind of, it resembles both, right? It's not straight Social Security because it reaches an aggregation point in terms of people put in and contribute their money, and each person has an individual account depending on where you are in life, age, disability, thing like that. You can drain the account. You can't do that with Social Security, right? If you're on Social Security, then you receive Social Security payments. You can't go to the Social Security office and say, "Hey, just give me the full amount now up front." Okay, so it kind of resembles both. When you're in the U.S. and or even if you're not in the U.S. but you're a U.S. person and you have a Hong Kong MPF, it gets complicated because how is it taxed? Is it reported? Let's go through the basics. Taxable. When the U.S. has a treaty with another country, like the UK or Australia, for example, it'll basically say the pension or retirement is not going to be taxable until it's distributed, depending on which country you're in. They generally get first rights, if sometimes only rights to tax it. Then there's a saving clause to make sure that, especially the U.S., can still require you to pay tax on it. Some countries like the UK, contributions made, for example, on behalf of a U.S. person living in the UK for a UK retirement that's employer born, you get the same deferred treatment that you would get for a 401k on your U.S. tax return. It's great. Not with a lot of countries, but with some. But there's no treaty with Hong Kong. So what does that mean? It means the contributions made on behalf of the employee are going to be taxable in the U.S. So let's compare it. You got a 401k in the U.S. Your employer throws in $15,000 for you. That $15,000 is not taxed now. Down the line, when you start receiving distributions, hopefully you're at a lower tax rate, and so you've made some money on that. Hopefully it grew when it was in there, and you made some more money. It doesn't work that way when there's no treaty with the other country. So if you were a U.S. person working in Hong Kong for a Hong Kong employer, the contributions made on the person's behalf are going to be taxable unless you may qualify for a treaty position. Is the growth taxable? Yes. So the money that is growing within the MPF is also going to be taxable because even if it's tax deferred in the country of source, there's no treaty. So the IRS is not going to recognize the position that with a non-treaty country that income is income and it's growing and it's accruing and you have to pay tax on it in the U.S. If you're paying let's say you've got money in the MPF and over time it's growing and you're paying tax on the growth, then your tax basis is going up, so you're not going to be double taxed on that same income when you take distributions. Okay, some attorneys get it wrong and just think that there's this automatic tax basis because one reason or another, but it doesn't work that way. Okay, there's no basis in it unless you've paid some tax in it. When it comes to the reporting, just as bad, right? You've got to report on all the acronym forms you may have heard of in your research, in one rabbit hole out the other. FBAR for foreign bank account and financial account reporting. MPF would presumably be considered a financial account. Fatca Form 8938 is for specified foreign financial assets. It would be included on there. PFIC may be kind of sort of depending on if you have access to the underlying investments. Do you control them? Can you access them? Do you know what's invested in? Is it invested in an equity fund, mutual funds, things of that nature? If you've got a Hong Kong MPF or other unreported assets and you want to get into compliance, there's various amnesty programs available. Avoid the fear mongering online. You'll be fine 99% of the time. I didn't mean to rhyme all of that. Okay, so you've got VDP, Voluntary Disclosure Program, as if you're willful or you can't certify under penalty of perjury that you're non-willful. Most people will do the streamlined filing compliance procedures, domestic or foreign, depending on the resident status of the person making the application. Then there's alternatives to the streamlined program, and that is delinquency procedures and reasonable cause. We have tons of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.